please give me a moment while I go live on Facebook. It'll take me just a second. Hope you're doing well. And I think we are live on Facebook. Hi everybody, I'm Sami Abu Saad, Director of Education at T3 Live. Welcome to our regular weekly videos. Today we're going to discuss the market, which is possibly at a topping point, and we're going to talk about some swing ideas for next week. Before I start, I have to share with you this standard required disclaimer to let you know that trading is risky and that whatever we discuss today is for educational purposes only. With that out of the way, let's go ahead and get going. I hope you're having a good start to your weekend. Let's go ahead and turn on the charts and take a look, shall we? So for the first time in I don't know how many months now, for at least a couple months, we got a wide range red bar on the data chart of the QQQ, which is the tracking ETF for the NASDAQ 100, or the SPY, doesn't matter. They're both the same. We got a wide range. Actually, the SPY is not as extended. We almost reached the 20 in one bar. So the SPY is really not that extended. If you look at the Qs, a little more extended. We got the biggest red bar we've seen in at least maybe a couple months or so, for sure, a couple months. And we have also a spike in volume. I don't put much weight on volume, but there is that spike in volume. And then, most importantly, I think, is the hourly 20 MA. Notice how, for the first time, I mean, I can go back as far as back to the end of the year. So about a month ago is the only other time that the 20 MA on the hourly chart flattened out a little bit. So as you can see now, price closed below the 20, and the 20 is starting to point down a little bit. So that's indicative of the end of the uptrend and perhaps the beginning of the downtrend. Okay, so that's what I'm seeing here. But I have to say, it's not an easy call. I'd love for it to be an easy call. I'd love for me to just get on the mic and say bearish, 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 but it's not an easy call. Most of the time after a wide range red bar, we get a narrow range bar. So I am hoping that we get a narrow range bar on Monday, and then Tuesday we roll over. So that's my hope. That would be a lot safer. I mean, it would become an easier call to make that this is the top in the market. I do think it's the top. I do think we get a pullback from here. I'm not predicting that this is the top for months to come. I am thinking that this is probably the start of the pullback, but it would make my life easier. It would make it an easier call if we just got a doji bar here and then we pulled back and then we broke under that 1, 2, 3. Okay, so that's what I'm thinking. If you look at the larger time frames, the weekly, we printed a kind of a little topping reversal bar, topping tail bar. So under 221.67 on the weekly, that would trigger, that would break under last week's low. We haven't broken under a prior week's low. Going back, this is a bad tick. So this really never happened. So we haven't broken under a prior weekly bar's low in 4 months probably. So I'm thinking, under 221.67 on the Qs, that would be, that's the minimum that we would need to break on next week. And then people that are bullish on the market think, oh my God, if this is the top, should I get out? It's actually better if we get a pullback, because if the market just keeps going, we'll get a blow off top. And you know what happens with blow off tops? They collapse. So it's better if the market actually pulls back a little bit and stays away from accelerating. Notice here, for example, we didn't get a pullback for, look at this, the whole year. Is that right? Yeah, the whole year. We never got a pullback. We got a wide range bar at the beginning of 2018, and what did we get? We got a collapse, a bit of a collapse initially. The market shot back up, and then a real collapse. So it's better actually if you're a perma bull, bless your heart, if you are, but it would actually be better if the market were to drop a little bit. It'd be a much needed pullback, and then this way it refuels, so to speak, right? It lets off some steam and then it can run up again. But again, it's not an easy call. I do think we topped. I do think this is the start of the pullback, an easier setup would be if we got a narrow range bar on Monday and then a rollover. It would be a nice transition C breakdown on the hourly chart on Tuesday or Wednesday. That would be the ideal scenario for me. Now the next thing you have to think about is, okay, what's the target? Is this it? Because that's nothing, that's very little. And yes, I think the market will react to the 20 when it gets there. Based on the bounce or lack thereof, we'll be able to determine whether this is it or we're going to roll over still. Does that make sense? So for me, when I'm looking for targets, I usually look for the 20 to hold. That's the 20 period moving average on the daily chart of the Qs. So I look for it to hold. So in this case, what I'm suggesting, what I'm saying to look for is look for the reaction. Look for see how price reacts to the 20, and based on the reaction, if we don't get a reaction, much of a reaction, then you'd expect the market maybe to continue lower. If we get a strong reaction, then you would look to play long on the next pullback or the next pause. So let's see what happens when we get to the 20, if we get to the 20. And then from there we'll decide whether the 20 is it or on the daily, or we should look for a deeper pullback to support on the weekly is right about here, and it will surely coincide also with the 20 MA. It'll be up here. So what's that price? I don't know what it is, but let's just say 206 on the weekly. Okay, but first things first, let's see how the market, if truly the market really did top or not. If it didn't top on Monday, we'll probably negate, or we get a narrow range bar, and then on Tuesday, check it out, on Tuesday instead of rolling over, we go back up. So if the market didn't top out, we'll either get a green bar on Monday or get a narrow range bar, and then on Tuesday go back up. Okay, but if the market did top out, then I would say that would be target 1, and based on the reaction to the 20, that will determine whether we should expect a deeper pullback or not. If we get a deeper pullback, then I'm thinking that 206 would be maybe that would be like the deepest. We could even hold, the beginning of the year low, which is 212. But let's see how the market reacts to the 20 first, if we get there, and then from there we'll take it one step at a time. The more important question, I'm going to go over the daily watch list. This is a very difficult time right now for swing trading. You know why? Because it's not a good time to be starting a long position. Clearly the market has been on a run up, and for the first time it's starting to look a little shaky, so it wouldn't be a good time to start a long position. But here's the problem. We have 10 positions short in the SST newsletter that for some reason started triggering short a couple days ago. I mean, I was scanning, looking for plays, long and short, like I've been doing every single day, like I do every single day. A couple days ago, just a few days ago, like maybe this day, that day, a couple days, everything that set up short, not long. It's weird, isn't it? So I think I had one long position which already trailed out yesterday, and now every single position, and I have 10 of them, are all short. So it's going to be tough for me to start new long positions. I have to be very careful because it's not good timing with the market, and I'm already overexposed, so to speak, but I can control my exposure through share sizing, and I have in this case, because some of the positions I'm risking only half a risk unit, some I'm only risking quarter unit, so I can control my risk through share sizing. But the other thing is, how many more do I want? I already have 10, exactly 10. By the way, if you want to find out what my positions are, or if you want to check me out for the next week, check out my day trading service, my swing trading service. I'm going to have a double open house, the first time ever, where I do an open house for the day trading room and the swing trading room. Link is in the description. It's free, doesn't cost anything. So feel free to register. You do have to register. You'll get my newsletter on a daily basis for free. You'll also have access to my strategic day trader room for free for 5 days in a row. Okay, so check it out, link in the description. For now, for tomorrow, since I'm going to be picky, I am only going to be playing if they trigger 2 longs and 2 shorts. I keep looking to the left because that's where I have the newsletter is already prepared for tomorrow. So I already have it here on this monitor, and it's going to go out tomorrow on Monday morning. When I say for tomorrow, I meant Monday morning. So this is already prepared. I'm picking 2 longs, 2 shorts. The longs that I'm picking from this list, which I'm going to go over in just a second, are only core plays. They're not swing plays, meaning they're long-term holds. Okay, I'm not picking any swings because it's bad timing to be starting a swing long position here. I'm picking long-term trades, a couple of them, and then 2 shorts also. Okay, so that's what I'm picking for tomorrow. If you're in the Strategic Swing Trader newsletter, you can log on your T3 Live account and access the newsletter right now. Access the spreadsheet basically right now. Or if you'd rather wait for the email, then you'll get it Monday morning before the market opens. Okay, with that said, let's start with the list here. Angie, this is a beautiful buy setup. Look at the pullback to the rising 20. One little problem with the Angie is the size of the stop. It's a little bit too big because you have to put the entry above the bar's high, stop below this red bar's low or the green bar's low. I'd go with the green bar's low. It's just a tiny bit lower. So this bottoming tail right here. So that's the problem with the Angie, is the stop is big, but I really like that buy setup on ANGI as a buy setup. BGFV is extended, but you know what? The extension happened through a gap, so it's not really as extended as it looks. I like to enter at or near the 20, not far above it, but in this case, because of the gap, I'm okay with it. A long right here, stop right here, okay? On the BGFV. Dish is very interesting. I don't think it's going to work, but it's a really good setup because we have a daily breakout. See it? Daily breakout, weekly breakout, and then monthly transition A. So it's beautiful on multiple time frames, but my issue with it is I don't think it's a tight base, or that it's a really very tight base. It's an idea over the base, long, stop under all these bottoming tails. Look at how many bottoming tails we got. Amazing. So stop would be under the bottoming tails. You'd be playing a daily, weekly, and monthly breakout on Dish. DT is a daily buy setup plus a 1, 2, 3. So the entry would be over just above that red bar's high, stop below it. 28.45 by 27.53. A GE is a daily buy setup that triggered through a gap, which makes it even better, right? But not only that, GE is also a weekly breakout. It says weekly time frame. Here's the monthly also, transition A. So I like the GE as a long-term play. Do I absolutely love it? No, I don't. What I do like about it is, first, the gap ignited the buy setup, then it held the gap, it didn't pull back into the gap, and then we have, we have kind of a tight stop, and it's a long-term play, wouldn't be a short-term play. So that's GE. LTHM is a breakout plus a 1, 2, 3. Not my favorite, but it's okay. Long over the red bar, stop below it. So 940 by 899. NG, we played it long a couple days ago as an earnings play. Worked nicely and now has a 1, 2, 3. If the doji bar was up here, I would probably play it, but the doji bar is not at the top. I like the 1, 2, 3 pattern I like it when that 1, 2, 3 pattern when the narrow range bar sets up at the top. In this case, it's okay. I think it's good. It's gold. Show me a gold stock that's stronger than the NG right now. There aren't very many that are stronger than NG. By the way, gold is good. I mean, is really bullish now. NVTA is a daily buy setup. Very sloppy. No doubt, very sloppy. But check out the monthly. That, my friends, is a nice monthly buy setup. So I like it higher as a long-term play also. NVTA. Long right here, stop right here. So just under the stop would go under the pivot, and then the entry would be over 19, it looks like. SQM is a daily buy setup, just like the NVTA. Not as good on the larger time frames, but it's a buy setup still. Twilio, it was a nice monthly buy setup. I regret not doing it. I really looked for a good entry on the Twilio. I couldn't find a good entry. I don't think I did find a good entry, and it just took off without me. As you can see, look at this rally, $20 rally or so. and then monthly is gone. So now I can kind of get in it on a 1 2 3 on the weekly. See that weekly 1 2 3, and then a daily breakout. Do I like getting in it here up here when I should have gotten in it somewhere down here? No, I don't, but you know, it is what it is. If I want it, I don't have a choice right now. YNDX is a daily breakout, really bullish, all-time highs also. I like the base on the hourly chart, so entry above it, stop below it. Shorts, AUPH. I was in the AUPH. I tried to short it at the top. I sent out an intraday alert just during the day, basically, an alert to subscribers to short it under that doji bar. It dropped nicely, and then what the heck, went right back up. So I killed it exactly break even. But as you can see, it really would not have stopped out. If I kept my stop at the highs, it would not, and now it's doing a transition C. So not bad short right here under the base, stop just over these doji bars. Okay, not bad, I like it. AYI is a daily sell setup coming after a tier 1 professional gap down. Notice under the 200, just under the 200, always gets sold. Under the 200, oh, that's not, I'm sorry, not TRV. Which one was it? TV, I think. Maybe, was it TV? Just under the 200? No, I forget the other symbol that I was going to show you, but it's okay. So which one were we on? AYI. Under the 200 got sold and now has a sell setup. Right here, short. Stop right here. Okay, like it. Sell setup. Next on the list is KOD. KOD is a good transition C. It's very, very wild. Trust me, I know. I was in it. So short would be under the base. Stop right here. I do think this is the top on KOD, but it's extremely wild. So be careful. Notice the weekly looks good to 50 bucks or so is what I'm thinking it will pull back to 50 bucks. And look at the monthly, totally climactic. So I do like it short. KOD. MTNB is a daily sell setup. I like it. Only issue is it doesn't have a ton of reward to risk. Short. Stop. Could also put the stop right here. Target 1, target 2, the 200 MA. Got it? On the MTNB. Next is STML. Not my favorite, but it's an hourly base breakdown. Right here, short. Stop over the base. That's an idea for you. STML. Beautiful monthly, rolled over completely. STML. So I like the monthly. TRV is a 1, 2, 3 on the daily chart. Short under this, stop above the green bar, and then look for the 200 MA on the weekly as your target. So it's a 1, 2, 3 on the daily. Tesla triggered already yesterday, but if you're not in it, I like it short. Triggered at 561, 561.25. Where's 561.25? I don't know. It's here somewhere. This is, no, that's not it. 561, there it is. 561.23, not 25. 561.23. Okay, triggered. It still looks good under 555, 554.26, but you'd be getting in it $6 than my entry. But okay, I like it. I like it short under the base. Stop right here, or the right stop would be the all-time high, but it would be too big. So the only entry for me would be right here. Stop right here. I don't like cheating the stop. That's called cheating the stop because you're not using the proper stop, which is the all-time high. But in this case, it would be too big of a stop. Might as well not do it because Tesla's not going to collapse. I'd only look for 500 bucks on it. $50, $60 pullback basically on Tesla. So that's what I'm thinking on Tesla. I didn't like how it closed strong at the end of the day yesterday. I'm in it already short, so I didn't like how it closed strong yesterday. So I hope it, I hope it rolls over and can add to it under 554.25. But I'm not really looking to add to Tesla. It's not one of the 4 that I picked. Okay, and then last but not least is, by the way, I was in the Tesla short. I was up 4,800 bucks, and unfortunately, I didn't cover at the lows, so I had to just jump out. Otherwise, I would have taken a stop on Tesla. Urban is a sell setup. Looks good on the monthly, looks good on the weekly, but daily is not a very tight base, so I am letting the Urban go. Okay, but it looks good on the weekly and the monthly chart. All right, I think that does it. I hope you enjoyed today's review. Let me turn on the cam, the webcam. Hope you enjoyed today's review, and thanks for sticking around till the end. Again, if you'd like to trade with me next week, day trade, swing trade, check out my services for free. Link is in the description. I also did a video, so far pretty popular, it seems to be, and I basically gave you my top 10 tips for beginning traders, the things that I wish I knew when I was starting out. Again, link is in the description. If you enjoyed today's video, I would appreciate it if you hit the like button. If you have any questions, comments, feel free to type them in the comment section or send an email to info@t3live.com. info@t3live.com. Thanks again for sticking around till the end, and I hope to see you on Monday on the VTF, the virtual trading floor for T3 Live. Thanks everybody. Enjoy the rest of your weekend. Take care.